Hi everyone, it's FOMC night. It's December the 10th. It's a Wednesday. It's 10 minutes to the decision. Pretty sure we're looking at 25 basis points cut for the Fed coming in at the top of the hour. We'll just see. Let's just actually check if my audio is working. Okay, Mary had a little lamb. No, it's not. Let's switch the proper microphone on. There we are. Oh, you can hear me a bit louder and clearer now. Yes, there we are. That's much better. Sorry about that. So yeah, what I was saying, we expecting markets really priced in. It was 90 odd percent yesterday, of 25 basis cut today from the Fed. The issue really is how heated the meeting has got, how much dissent there is. There's lots of gossip on the wires. Both Bloomberg, CNBC, both been covering this really heavily today. Talking about the lack of inflation data, not the fact that the inflation seems to be sort of quite mellow, but certainly the idea is that it could still pick up. The impact of the tariffs could still follow through. And so the dovishness from the Fed, obviously led by the president, who's not actually on the Fed, but he's the biggest dove of all. Obviously led by his man Stephen Myron on the Fed. How heated that meeting's got, because there will be dissenters who saying, look, we've got stock markets at all-time highs. The jobs market has eased somewhat. It hasn't cracked. There's not very fissures in it. It's still looking quite robust. Look at that, the weekly claims last week, 119,000, the weakest since January 2024. So, and then a few years back from that, we look at the data. ADP's been relatively strong. We had a positive reading again yesterday. So yeah, there's plenty to argue this both ways. As far as what the markets are making of this today, this is the dollar. Sorry, this is dollar yen. Let me just make myself a wee bit smaller. This is dollar. This is the dollar. So dollar. Let's just start with the euro. So it's the hourly chart today on the dollar. So dollars are weakened today. If we look at the sort of high time frame, as we do all the time, the 4-hour chart. Yesterday we got into this low at 116.20, and we're up at 16.60. So 40 pip range from yesterday's low. Really sort of obviously waiting for what's going to cut incoming in the moment. But as you can see, euro, if we've got the daily, the euro dollar is up from these November lows at under 115, 180 pips higher now, 116.80 zone last week. So euros ticked up. So the dollar weakness story continues. Look at the CAD, 138.33, down again today. That's the daily time frame, which default to the intraday. A bit weaker this afternoon. Sterling 133.40 at the moment, ticked back up from a move down yesterday, and it's been a bit strong all day ahead of the Fed. So Aussie, big run for the Aussie we've seen before. Aussie 66.50.41, so back from the 66.50 zone, down a tad today, but up strongly on Monday and again yesterday, and but we're down today. 66.50 was an attack zone again earlier this morning, but Aussie down again at the moment. So really the story is the weaker dollar yen, 156.40. It's a bit of an outlier, but even today dollar has weakened even against the yen, down so far today. So really, remember last time we had this sort of mess with the dot plots running out to 27 and 28. Hi, Lilu. Say if there's anything you want to have a look at in specifics with regard to trading, let me know. Obviously, this is a major news event, so be careful trying to trade the news. I know a lot of you do, and a lot of you love it. But standard accounts, we have this 5-minute window before and after the actual news break, so a 10-minute window, and it's always more comfortable to let things lie. Let's see what we look like in an hour's time, not a sort of jumping in, because obviously we then got Jay Powell to negotiate the press, and that will be one of the most interesting press conferences we've had from a central bank in a long time. Trading a very delicate line. Massive political pressure on Jay Powell. His tenure comes to an end in May. Trump's talking about obviously a new man. It was rumored he was going to announce Hassett next week. the fact he hasn't suggests that he might still be trying to sort of coerce Besant into the position. Scott Besant, the man that with the markets, when Besant took the job of Treasury Secretary at the beginning of January, when Trump appointed him, he was seen as they'd grown up in the room, the safe pair of hands. He wanted 10-year yields under 4%. They got there, they rallied, then the bounce rallied back up, and now they're back down around about this 4% level. So he's been a relatively good communicator, if not a great communicator. Hassett, he's got this complete grinning cat. I call him the smiling assassin. But again, he's spun the Trumponomics very positively. But just the fact he didn't come out and give him the nod as early as the beginning of December as he threatened to suggests that maybe I'm in and see what he can do with Besant as far as Fed. Whoever gets the job, I mean, it doesn't matter. We're going to see a much more compliant and much more dovish as far as the politics are concerned. Fed next year moving forward. How much independence the bank then retains from the politics would be questioned by the markets. Then the markets don't like that sort of thing. However, obviously the president would love it. So you see how much he obviously falls out with one-time allies very, very quickly. Does Trump? It's the way he operates, isn't he? He's very transactional. So see how all that pans out into New Year. Meanwhile, obviously tonight, we got the weaker dollar across the board. Let's have a look elsewhere. Indices today, Nasdaq 2560. So I think we got a really okay flat day again. Waiting, we're down again today. This is the daily move. The Dow is actually positive at the moment, and the S&P is negative marginally at the moment. So Monday was down, Tuesday down, and we're down again here on Wednesday. So a strong close to last week, and we've given up some of the gains of last week so far this week. And the Dow is flying in the face of the other two major indices. A lot of that could be to do with individual stocks and the and obviously the that Paramount deal. Lilu, I trade about 50 assets. I scan 50 assets on a day basis normally. I put what I'm doing on most of my trades here. If you want to follow me, I'll have a look what I do. My approach here on the trade chat. So follow this. I update this every night. So I'll most nights, not every night. I'll put something up tonight. At the moment, my trading system, which is over here on another workstation, is looking to go short the Dow, the S&P 500, and the Euro Swiss. That was the last time I looked at it at 3:30 my time this afternoon. So I'll have a look at this. These are end of day positions. So we'll see what happens. These are trades from Friday and earlier in the week. We're I think we're up generally overall. If you had all those numbers up, I think we are. I can't remember. It's the overall results were interesting at the end of the week, at the end of the month. So that's how I approach the markets, Lou. So I trade everything, but I trade all the major forex pairs, oil, gold. I don't trade silver very much. Oil, I've tried to trade a bit more. It's been a bit boring recently. The major indexes, and then I'll trade on a short-term basis. I like the Dow and the DAX. They're my two favorite short-term trading. Gold, also short-term trading, also on an end-of-day basis as well. Gold's in that 50 asset portfolio, but principally all the forex crosses, gold indexes, and a couple of other things as well, as takes time. I look at, if I'm going to trade crypto, I'll only trade Bitcoin. It's the only crypto I trade on an end-of-day basis. So anyway, that's what I trade, Lilu. So let's just go back to actually let's go to gold. We haven't looked at gold yet today. Let's start with silver. Actually, silver went over $60 yesterday, and we were over $61 earlier today as well. So these are new all-time highs for the silver market on the back of silver's not only a key precious metal, it's also a fundamental industrial metal as well. So many are arguing the strength we've seen in silver in particular is a little different to this massive rally we've seen in gold, although it's obviously following in gold's footsteps to the upside. So is that signs of the manufacturing slump we've seen globally? Remember those PMIs, all very negative still or still negative in, not very negative, but negative in contraction mode globally. Is that a sign of a demand elsewhere, so particularly in the Asian economies, in China and other economies? But we're not really seeing that yet. So is this just like the fundamental shift we've seen from central banks driving the gold market? What's driving that silver market? Well, there's not a clear explanation, but as you can see here, some big, strong daily candles on silver. So be careful trying to catch the top on silver, as many tried to here at $54 here back in October, and we were just back through and ramped through it through 58, through 60, and now I say over 61 earlier today. So silver remains bid. Just going back to the gold, we're back under 4,200. So we're still over the key 4,000 level, and we have been for the best part of 9 weeks now. We're into our 10th weekly close over 4,000, if indeed we do hold over 4,000 for the rest of the week. But we've just slipped a little bit in the last few days under 4,200, and again, very little action over the last week to 10 days on the gold. Actually, see how small those candles are. These are the daily time frames. So again, careful with that gold move. It's a little bit subdued. Okay, so as far as today's concerned, the chopping of gold, we were up and then we were down here using this strategy. It's sort of drifted a bit higher, now it's a bit lower. So anyway, let's get back to the news. So let's just check how the news is coming through. Obviously, we are expecting numbers imminently. It looks like here you can see gold moving higher, so we will expect that. That's been the announcement decision. A particularly divided Fed. How much dissent is in there? That will really rock the market. So we have had a cut. So the 25 basis point cut everybody was expecting is in. Gold dollar is weakening here. You see the gold market reacting. Let's look at the 5-minute chart. We'll look at the reaction here. So gold is moving higher. The dollar's moving lower. Stocks have ticked higher as well as the dollar has come down. They've paused their first round of Steve Marion wanted a 0.5-point reduction, but in something, Austin Goodwin joined Jeff Schmidt with no cut. So there's two not wanting a cut. One was so two have definitely said there's no cut. So we've gone to the 350 to 375 a window. And as expected, Myron wanted the 50 basis points cut. Then the 12 voting members voted 9-3. So we got 3 dissenters. Obviously, Myron wanted 50 basis points. Goolsby and Schmidt were talking with no change. So we've got 2 guys that wanted to keep rates as they were. Another guy, unsurprisingly, Myron wanted to go more aggressively, more dovish. The chairman's obviously voted for 25 basis points. The rest of the 9 have voted. The rest of the 8 have also voted for 25 basis points. So let me just try and pick out the highlights of the statement that's just come through. Economic activity has been expanding at a moderate rate. Okay, that's a statement from September as well. Jobs gains have slowed this year, and the unemployment rate has edged up through September. Most recent indicators are consistent with these developments. Inflation has moved up since earlier in the year and remains somewhat elevated. So the elevated phrase with regard to inflation is still there, and he's talking about it somewhat. Remember, we haven't had any CPI data since September. We've had PCE data, which was at 2.8% on Friday, the price index, which is what the Fed focused on more than the CPI data. But we've not had October, we've not had November CPI data that normally comes out in the middle of the month. So that maybe obviously they're hedging their bets with this cut. So the likelihood of a cut in January, I guess, will have fallen off. The committee sees a maximum employment inflation at the rate of 2% over the longer run. That's the standard sentence. Uncertainty about the outlook remains elevated. So, economic outlook remains elevated. The uncertainty remains elevated. That will really get up the president's nose. The committee is attentive to the risk to both sides of the dual mandate and judges that downside risk to employment rose in recent months. Okay, so this weakening jobs market. In support of the goals in light of the shift, the committee decided to lower the rate by 0.25% to 3.5 to 3.25. The target range remains the same. The committee will carefully assess incoming data, the usual line, involving outlook, balance of risk. The committee is strongly committed to supporting maximum employment and returning inflation. That's that line repeated again. Appropriate stance of monetary policy. The committee continue the monitoring inflation of incoming economic data. So a lot of this data that's been withheld from them because of the, particularly because of the government shutdown, they're using that as not an excuse, but saying, we're waiting for that data to come in. They've always been saying they're data dependent. It's been a big criticism of them about not leading, following rather than not leading. We're prepared to adjust our stance. The committee's assess will take into account a wide range of information, readings on labour market, inflation pressures and expectations, and financial and international developments. Reserve balance have declined to ample levels, and we initiate purchase of shorter-term Treasury securities as needed to maintain an ample supply of reserves in an ongoing basis. So nothing about changing of the grey book, but the highlights really are the unsurprising one that Myron wanted 50 basis points cut, but there has been a split between the rest of them. So Goolsbee and Schmid were happy to keep rates as they are. The other members went for the 25 basis point cut. So the Hawks are 2, the Big Dove is 1, and with the fall in the middle as ever, and we have cut by 25 basis points as the market was expecting. But as you can see here with the gold market, we still got a weaker dollar. The gold has moved from ahead of the announcement at 4,194 or 95. We went all the way to 4,230. So a $15 move on gold, and we're still holding at we're back over the 4,200 line at 4,208. So this is obviously just 5 minutes after the announcement, and gold is continuing to move up. The dollar continuing to weaken. So yields have obviously come down. The 30-year is currently at 4,787. Stock markets are up. Cash markets are up. The S&P is 6,852. Hardly moved up, but up 52 points. Some of the projections are coming through now as well. The PCE median projection for 2025 is 3%, 2.5% for 2026. The dot plots still look a bit messy to me. Median GDP is 1.7% in 25, 2.3% in 2026. So we're still seeing a significant increase in growth for the US economy as far as the Fed are concerned for 2026. It's the most divided Fed we've seen in a long time, and obviously it's going to get even more pressured from the government. Remember, Trump is out trying to do. He's on a tour of the country, trying to ramp up support for his the cost of living crisis. It's hitting everyone all over the world, but certainly mid America, the farmers, ordinary Joe, mum and pop businesses are all struggling in the US. It looks like well, I'll just bring up the CME for January. It looks like it's the third consecutive cut from the Fed in the last 3 meetings. But that looks like that the likelihood of a January one looks a bit cooler now, given those 2 dissenters. Obviously, Myron is going to push further. Interesting, the short end of the yield curve is now at 355.89. Down again. The 10-year is 4.1488. So it had been as high as 420 earlier this morning, and it's down to 414.88. So yields are down, but still relatively elevated from that chart. So my take of it, again, for what it's worth, this data-dependent Fed continues. The worry about inflation continues. Goolsbee and Schmidt has particularly have broken ranks and said no, the data's the markets. The US economy is robust enough. The consumer is holding up. We don't need to cut rates again. However, the consensus was to go again, but not the whole half of 1% that some of the key dubs wanted. So how more dovish the Fed comes into 2026 with the new chair, it might be tainted. We were talking about, this time last year, we were talking about possibly 4 cuts for 2025. And, we've had the 3, but many were looking at 5 and 6, weren't they, at the beginning of the Trump term. It's sort of just after the election had been completed. So that hasn't happened, has it? We've had the 3. So we are down. I mean, it's still. I mean, it's not expensive, the rates in the US, but they're still the top end of some of their major competitors. So we saw the RBA maintain at 3.6%. We saw the Bank of Canada earlier today. There was nothing. There was no movement from them this afternoon, and so the RBA rate on Tuesday traded at 3% at 3.6%. The Bank of Canada kept it down. They're at 2.25%. So that the Fed sits somewhere betwixt the two. So it's going in the right direction. Powell will say he's got a very, very difficult press conference coming up. I would expect. There's still, as far as the politicians in charge, the administration, interest rates are still far too high in the United States compared to the competition. Remember, it's 0 rates in Japan, although they're looking to try and raise them. It's that the likelihood of that happening seems to have cooled somewhat. We got more or less negative rates in Switzerland as well, and around about 2% in Europe, and possible rate hikes in Europe next year. There's about 50-50 chance of them actually raising rates from this 2.15 in Europe next year. So let's see where we go. I say the immediate response here is a stronger gold market and a weaker dollar. I'm expecting as the yields have come down and the stock markets have moved. Let's go back to the US dollar crosses. So euro 116.75. Yes, so we were down here, weren't we? Just ahead of the 16.55. So we've moved a good 20 pips. I mean, it's not a massive amount, is it? On what was really, really well expected news, but we are moving back up now. So if we just go back to that hourly rate day, the weaker dollar day has continued and it's been stretched from the final announcement of the day, or the key announcement of the day. So 16.75 is where the euro dollar trades. Aussie should have benefited quite significantly as well. Yeah, 66.60 Aussie breaking out of its daily range. It's channel there. See where that one reads, because it's had a really strong move. Swissy has also had a really strong move against the dollar this year, and again it's moved strongly today and down at 80.13. So it's pulling in and targeting the 0.800 level once again that we saw on the 4th, and we've rallied we moved up from there, but certainly that's now in range for the Swissy. And again, if we do this all the time, look at the daily move for the Swiss franc. We've had a really big move down this year, and then we've been really in this range, pivoting around this 0.80 level, and we've sort of moved away from it last few days, but we're coming back towards it today with a big down day. So dollar Swiss targeting 0.80. Dollar CAD we had a look at before. Yen has even ticked up here. So dollar was moving higher in the last 3 hours. Sorry, it's last 3 days, you fool. Today, I say even the yen is improving, as I said earlier, against the dollar today, and we've been as low as 56.10, but we're still over 56. So yen still getting a bit clobbered. They got a big clobber yesterday, and still relatively weak, but coming back against the dollar. We went to 56. I couldn't quite get to 157 yesterday. and we're down 80 odd pips today, 56.25 or 75 pips, 56.25. Oil market, we were short this, weren't we, earlier? Can't remember where we got those last night. Last night it was, and that's gone against us. So it's given back in the last few hours. We're back to 58.40 where we got short on WTI last night. This is the 10-minute, wasn't it? It was last night. It was very short oil. Crypto 92.77. So the weaker dollar has helped crypto. We've had a relatively good day today. We did get back through the $90 level. We also got back to the key $92 level. Sorry, let's take the daily time frame. We have got back to $92. Had a relatively good weekend. Strong day yesterday. So we're back into that 92 level, which is relatively good news for dollar crypto bulls, having been all the way down to 80.50 here towards the end of November. It looked weak again here as we started the month last Monday, but we've ticked up, retraced, and then we've been up for the last 3 or 4 days for crypto. So we are back, edging back over 92,000. That's good to see. Excuse me, that's good to see as well, but still relative range bound for the last week or so. So we'd want to break over that 93,600. Certainly have a get out, push this top of Bollinger Bands up. So 93,500 would be your resistance area. Support is that 20-day moving average there at 89,400. That's where we're stuck at the moment. Liru, help me understand the 7% margin will help in trading. Liru, I haven't got time to do that here, but if you go into if you come onto our Discord group, the support guys will explain it actually quite clearly. It's basically to make sure that you're not overexposed, okay? And if you're only trading one trade at a time, let me try and show you on my book here. So if I was going to let's say I was going to buy this, it'll show me what my margin. See, this is what you're looking for here. So it's this margin used doesn't want to be more. This level here, this margin level here doesn't want to be more than 70%. Okay, so for instance, let me open a trade here on Bitcoin. Bitcoin, it's been up today. Where are we now? Let's have a look. The hourly rate is it's not doing anything, is it? But let's just say we want to buy this. So we're going to buy this. Hang on, cancel. Let's bring it up. So we're going to buy. Let's make it a few more. And watch how this changes. Watch my margin level. So you can have lots of open positions with small lot positions. So we're going to buy this. I want a stop loss. Sorry, let's just open that up. So I'm going to have a stop loss. Sort of down here. I want my stop loss. We'll call it 91,800 for the it's just arbitrary. Sorry, 91,800. There we are. That's my stop loss. So I'm risking a very, very small amount, $50 odd, and we're going to buy it. There's my stop loss, 91,800. We're going to buy it now, and you'll watch watch this change when the position gets placed. And it's not worked. Why isn't it worked? Right, sorry, stop loss is too close. Okay, so there's my stop loss. There's my margin that I've used. So this number here, this margin level, doesn't want to be over 70%. So you can see when you're trading really small amounts like this, you can have lots and lots of open positions. The problem is lots of people trade huge lots. So like they might want to trade 10 lots of this asset, which is a huge amount. It's not going to let me do that, is it? No. But the idea is to keep you safe, basically. Okay. So regardless of the size of your account, you don't want to be risking huge amounts of your capital, or it's not really capital, is it? It's of your demo account, or your paper account. If you're going to move on to be a funded trader, and when you start making profits on your funded account, you are that can then be turned into real money, real cryptos, real returns. So keep it safe, keep your margin exposure within sensible levels. And as you can say, you don't have to be trading big lot sizes. Don't believe everything you hear out on the internet. You can get rich in this business risking very small amounts and small lot sizes as well. They're the ones that don't get noticed. They're the ones where you can just keep ticking away, and get consistent. And then once you have a consistency to you, Lilu, then you can start increasing your lot size. But even the best traders, even those people like me that have been trading for years and years and years. Not that I'm a great trader, but I've been trading for years and years and years. I very rarely get anywhere near 70% of my margin gobbled up. It's just far too risky. You can't sleep at night, and the market can be so volatile sometimes. You've been taken out. Slippage is part and parcel of the game of trading. It happens all the time, and the bigger the lot size, sometimes the slippage can be bigger on those sort of positions. But keep it sensible. Trade one trade at a time, and you will always know exactly what margin levels. If you've got multiple trades open, it's a bit more difficult to see what the level is on each individual account. Okay, but the guys on the support desk on our Discord group. So come into the general chat area here, and they will point you in the right direction, and they will explain it to you as well. There, I've not really got time to go into it in any more detail here. Okay, so come into the general chat and ask any of the team, Thompson, Katzen, any of the team here on the general chat, and they will explain or point you in certainly in the right direction. So people are always asking about it. Here we are. There's general questions. There's the issue about the consistency rule. Oh, it's not really a consistency rule, but it's a winning day, losers day. Absolute value. Give you a sort of extremes of trading. We don't want people trading. Earlier, the 30% margin rule was not there. It's 30% margin. Goat trader. 30% margin rule has always been there, my friend. We made it explicit a few months ago. And now it's definite there in prop trade volume 2. But I say the support team, I say Thompson, Christian, they'll all answer those questions for you quickly and immediately on as you put your questions in. Okay, so best of luck, my friend. Anyway, so there we go. There's our where's our margin now? Margin level. Where we are? We are 4%. So there we are. Just close that out. Okay, take that off. Where was I? Yeah, so basically it's the dissenting Fed, as many were expecting. The names in the frames have now been confirmed. It's Goolsby and Schmidt, and obviously Myron wanted a full 50 basis points hike, 9-3 split. I don't think I can't remember the last time we had a split like that on the Fed. I'm going to look that up when we've finished, and see. I'm sure somebody will be talking about it now. But for a split like that, open. I mean, they've been quite quiet. There's been the news shut down for the last week or so, and we haven't heard anything publicly from the chairman, Powell, since back in October. It's a while, isn't it? I was switched off completely for 2 weeks in November, but I don't think he was around much then either, was he? But yeah. Anyway, I'm just looking at the 2-year yield here on the Bloomberg feed, and it's it's still down. It hasn't bounced at all. So crypto's moving up, suggesting the weaker dollar. It's got to look at the we'll come at the markets in a minute. Euro 1668. So it's come off its highs a wee bit from the 75, we were at 1675, we're at 1668, so it's coming down a bit, but the trend of the day is still set. You can see that. And let's have a look at the stock markets. Nasdaq up on the news with the weaker dollar, as you might expect, to come off a wee bit again. Because as I say, it's priced in. It was what was expected. If I just hopefully, where are we? We're 23. It's half an hour, 23 minutes gone. So the CME Fed Watch tool, which is 15 minutes delayed anyway, the free one, but that should have updated since the announcement. So let's just have a look at what January looks like. Remember, we were like 50, 60, I think it was 65 of a chance of any cut today. So the Fed Watch tool hasn't updated because of the there we are, unsurprisingly, due to the announcement. Right. Yeah, it's a 91%. Was that today? Was that? Yeah, that's still today. So this was. It's obviously delayed meeting. We were at a 91% chance of a rate cut today. That's happened. January, obviously, this it was 70% of. So that's gone up during the day as well. So that's only a 24% chance of another rate cut in January. So this does look like we may have stopped. Obviously, the political ramifications will start coming as well. Basically from tonight. So I haven't seen any. I've got a feed here with Bloomberg and CNBC on here. Yeah, so I mean overall, the likelihood is a potential stronger stock market, you would argue, on that. Weaker rates, obviously, particularly the rate-sensitive, high indebted high-tech companies looking for raising lots of capital. So it may raise that to the upside, but really sort of consolidating again today as we were yesterday. We are consolidating the highs, which is always positive, even in December. So big strong rally towards the end of November and consolidation so far ahead of the Fed announcement. The Fed announcement has come in line with expectations. Perhaps the descent wasn't as much. It was as bad as the markets were expecting. The 9-3 split. There was only Myron that speaking out loud here. It was only Myron that actually broke ranks. Not really broke ranks, but pushed for 50. Nobody went with him that dovish. So the rest of the board, I haven't actually seen what others have said. Obviously, the press conference starts in about 5 minutes. So I'll be interested to see what I'm losing my words. The governor, the chair, has to say on that. As I said earlier, be very difficult for him, I would imagine, treading the lines there, and undoubtedly going to come in for some significant criticism from the president and his entourage, no less. So let's see how that plays out. And again, we might see. Remember, the thing on Lisa Cook is still. It's interesting. Somebody in Bloomberg just mentioned it. The case against Lisa Cook is still spinning around, so they might be going digging for more dirt on more members of the Fed if he doesn't get his own way, which is where he operates, isn't it? So stocks consolidating at highs still. Dow a bit more positive than the other two, less sensitive to the interest rate environment. So a strong update actually today for the Dow, and the S&P a bit like the Nasdaq down a tad, but it's actually now back up again for the day. We look at the hourly chart. So it's been down earlier and it's spiked up, but it's given up a lot of those immediate gains from the announcement at 7 o'clock. So it'll be interesting to see where the market's finish in a couple of hours here in the United States. Elsewhere, I'm still short the FTSE. We were quite in the money on. We opened this Friday night. I can't remember. Day before yesterday. So on was that Monday? Oh no, it's the hourly chart. It was Friday night, wasn't it? So Friday, Monday, Tuesday we were down. Yesterday we're sort of back to where we got in at the moment. So that's flat. See if that comes back down. Well, again, I might close that one out. We should say we're trying to short that. But this FTSE's had a really good run this year, unlike last year where we were up about 3% for the entire year. I think we're up about 20% so far the FTSE. So some value in some of the FTSE stocks here in the UK. The stronger sterling isn't helping us. But I say the press conference is about to start. So, guys, if you don't mind, I'm going to leave you and go and listen to that. We'll update you tomorrow. Tomorrow's data is thick and fast again. That we've got jobs from Australia overnight. We got the Swiss National Bank with their rate announcement early in the European session. And we got some speeches by the Bank of England governor, and then we got weekly claims, which was that big surprise, 190,000 last week at normal time, 1:30 tomorrow. So we'll be live for that. We're live for the US data tomorrow at 1:15 and see the and sort of lick our wounds or see how Jay Powell moves the market in the next half an hour or so. At his press conference, which is about to start now. So I will leave you with the gold market. Quite the most interesting, isn't it? We had a big move up. There we go. Nothing on the day, but on the 5-minute chart and a reaction to the again another one that's moved up and they're giving it all back. So we're back to where we were basically, as we were here with gold. It's a bit more with euro. Was still holding gains, wasn't it? Interesting that move on gold. Euro still holding up a tad. Aussie still holding most of the gains from the announcement. Dollar CAD given half of the gains back as well. Sterling 5 minutes since the where are we? 30 minutes. So there was the big move and again holding the gain. So dollar's weaker against its major crosses. And I'm just going to move to watch Chair Powell. Okay. Unless you want to, should we put him in here and watch him together? No, it's delayed. That's from Washington. Right, I'm going to go off and watch the chair. He's basically reading the statement now, and the questions will come in the next few minutes when he's finished reading. So thanks for your time this evening, my guys. Liru, absolutely no problem, my friend. That's what I'm here for. If what I explained didn't make sense, you can watch that again. Obviously, you can watch this recording. Get to the guys on our Discord group, and they will explain it much more clearly. Okay. So take care, everyone. Be safe. We'll see you again tomorrow. We do this every day. Remember, it's free of charge. There's no comment. And I'll put up what trades I'm going to take tonight, if any, later on. So watch our WhatsApp group. What am I talking about? Our I've lost it. Where's my Discord gone? Our Discord group for that later. I've lost the Discord, but anyway, we'll see you all tomorrow. Let's go and listen to what the chair has got to say, and I'll see you soon. All the best, everyone. Take care. Bye-bye.